everyone. Today I'll be presenting a stock pitch on Rolls-Royce, and thank you for the opportunity. The first thing that I want to talk about is the Rolls-Royce's business model, which is basically based on performance-based contracting approach, that is performance-related remuneration. It is not the value of the engines per se that is calculated, but the flight performance hours that can be achieved with the engine. That is what is calculated. Rolls-Royce remains the engine as its property and is responsible for the maintenance and the repair of the engine. Now, cost factors such as operation, maintenance, and repair of the engines are already included in the pricing model. Now, this unique and interesting business model also made possible for Rolls-Royce to target low-cost airlines. The value proposition is better power for changing world, the engineering excellence, and operational excellence. The key resources that they have are the engines are owned by Rolls-Royce, as discussed in the earlier slide, the world-class power and propulsion system, patents, reputation, and brand, and also the manufacturing capability that develop technology that anticipates customer needs. They basically have four customer segments. The first one is the civil aerospace. The second one is the defense aerospace. The third one are the power systems, and the fourth one are the marine and the nuclear. Now, after discussing the business model, I would like to talk about the key growth drivers. So they basically revolve around two key areas. The first one is the cutting edge technology, where basically Rolls-Royce has the best engineering team, and the company is going to produce the best generation engines with low carbon emissions. Now, low carbon emission becomes critical here and important because low carbon emission engines will be key to reach 2050 climate change goals. The second key growth driver is engine flying hours. Now, after understanding the business model, we know that engine flying hours becomes a critical growth driver for Rolls-Royce. The next thing that I want to discuss is about the market position, which is fit for growth for Rolls-Royce. And I say so because the aircraft engine market is expected to grow by a CAGR of 5.23%. And the growth in the aircraft type A330s is growing by 10% year on year, and Rolls-Royce has 80% share in the A330s. Rolls-Royce has been the market leader, which captures about 46% share in the aircraft engine market, and will be the market leader in the aviation engine industry, given their value proposition, given their patents, given their research, given their engineering team, and the next gen engines that they're going to produce. And this is again owing to whenever the aviation industry comes back to its pre-COVID levels, I think Rolls-Royce is going to be the market leader again. Also, we see that the engine flying hours is mostly flat, 40%, which is taken as a percentage of 2019 in 2021, but would reach to 55% in Q4 2021, and finally it will reach to 100% in Q4 in 2023. This is again owing to the lower COVID cases around the world, and also the vaccination drive that is on the up. The two graphs which we see below are basically one which basically tells us the large engine flying hours as an estimate of 2019 in terms of percentages and in terms of millions hours. Now I'm going to talk about the financial projections over the next 5 years. Now we see that the free cash flow is about minus 2 billion pounds in 2021, but is expected to reach a positive of 436 million in 2022. The DACF increases to about approximately to 1.9 billion in 2022, which gives us an estimate value of about approximately 19 billion when calculated at a multiple of 10.6. Now, based on the above understanding, the final stock price comes at about 170p. The trajectory of the stock should be on the rise, as there is 65% upside on the current value of the stock, which is hovering about 105p. And we can see that calculation below in the figure that the implied EV comes out to be 19.8. The EV adjustments are basically 5.4 billion, and the implied equity, which is nothing but the negation of the above two, comes out to be about 14.3 billion. The share count for Rolls-Royce is about 84 million, and we see that the target price, which is basically the implied equity divided by the share count, it comes down to be 170p and not 162p, which I've already mentioned in my email earlier that it is something which needs to be corrected. I think the analyst has made a mistake there. So it comes out to be 170p. So now basically after understanding the unique business model, the growth drivers, and also the market, and then we discuss the financials, my recommendation would be based on the valuation and the 12-month target price from now, I would recommend my position is long. We also see that because the DACF and the EV estimates gives us a price target of 170p, which is again about 65% of the upside, which is higher than the current price, which is hovering around 105p. But before I end my recommendation, I would like to make sure that I go ahead with some investment risks. And there are 4 risks which I want to talk about. The first one is the COVID-19, where basically and the probability is high for it. Basically, there could be future disruption for the aviation industry from COVID. Risk of a third wave could cause further disruption to the aviation industry and cause reduction in the engine flying hours, which is one of the most important key growth drivers. The second is the vaccination timing, because the vaccination timing could also uh, for the target consumers would disrupt the flying hours for the consumers who fly more. So vaccination timing, the probability is low, but the vaccination timing could also be a key risk. Then the next third one is lower defense spending, and that could be possibly due to higher spending in healthcare. It could lead to lower business for aviation industry, as we saw for Rolls-Royce. One of the targets customer segments was the aviation, was the defense industry. Then the fourth risk could be recovery for long haul flights, because we know that short haul flights would have faster recovery than long haul flights, which could again affect the flying hours and could affect, it could be one of the potential investment risks. I would like you to thank I would like to thank you again for the opportunity, and my recommendation would be to go long for the Rolls-Royce stock. Thank you.
Down the free or mobile application now.